Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning. Hello, everyone, and welcome to a new episode of Chat and Chart. This is the London session, and we're hosting the London session open. This weekend was quite a weekend, yeah. Well, I don't know if you've heard, but the US was waiting for a proposal from Iran for peace talks. And yesterday, Trump tweeted that I just read their proposal and I don't like it. So it seems like we're going to go back to war and more blockade of the Strait of Hormuz and more disruption in supply chains. So we'll have to wait and see, but it doesn't look good geopolitically. But overall, the markets started reacting once they opened. Once we saw the market open in Asia today, gold dropped, the oil went up, the dollar went up, and everything else started giving back some of the gains it made last week. So yeah, that's pretty much it in terms of major headlines. Otherwise, let's get to the high impact news calendar and go through it day by day, and then we move to the charts. All right. Good morning, Miza. Hi. Okay, so we start with Monday. Today we have existing home sales in the US. Now, new home sales last week in the US was very impressive. So let's see how the existing home sales would turn out to be. The previous reading was a little bit below 4 million home sales or existing home sales. The forecast is growth to 4.05 million. And the actual, if it comes in higher, then it shows more confidence in the real estate market in the US. And that's a positive thing for the US dollar, obviously, and vice versa. So not a very high impact, to be honest. But like this week, we have other things like other than events or other than data points, we have some very important events, such as I was reading now today, Kevin Warsh becomes the new Fed chair. Okay, so he takes office today, and tomorrow we have the U.S. Here it is. We have the U.S. CPI report. Look how it looks like. Look how crazy it looks like. Now, the previous was 3.3. Let me remind you of something. Before the war, it reached 2.4. Now, it's at 3.3, and it's expected to go back to 3.7. Imagine how crazy of a jump this is. So, on Tuesday, we have the US CPI report, and on Wednesday, we have a speech for Kevin Warsh, his first ever speech as Fed chair. And we have the Fed balance sheet on Thursday, and we have Trump-Xi meeting, which is Trump's meeting with China's president. Okay, so this is going to be like a tough week. It's going to be a volatile week. But back to our calendar. So yeah, as I said, we have the CPI report coming from the US. It's expected to be much higher. Now, month over month, it's expected to go lower, but like the yearly number, which I like to measure against the most, is going to be jumping to 3.7. That's as per expectations. So if it comes in at 3.6, it's still very high. If it comes in at 3.5, it's still very high. So yeah. And obviously, if it comes in at 4, that's even like worse than expectations. That's going to be very painful for the US economy. The core is expected also to go up, so it's not only energy that is causing this surge. Uh, the core CPI, which excludes food and energy, is expected also to go up. And we have the 10-year note auction. Last auction ended at 4.282%. I think the next auction, or this auction, is going to end at a higher, like I think above 4.3%. But let's wait and see. And of course, we have the German CPI, which is expected to go lower to 0.6% in comparison with the previous reading of 1.1%. So that's it for Tuesday. And as I said, we're going to see a Fed chair speech this week. This is going to be very, very important. Okay. So on Wednesday, we have the PPI reading, which is expected to stay unchanged. I doubt it's going to be unchanged. It will come in higher than expected, I think, because of inflation and the situation in the Middle East. And then we have the crude oil inventories. Last week we had like a shortage of 2.313 million barrels. I think it's starting to show very obviously that the supply or the demand is outpacing supply, and there are shortages in crude oil inventories. Now, finally, we have the 30-year bond auction. Last auction ended at 4.876%, but it's expected, or I expect it to go above or be above 4.9, 4.2, 4.92% because of the future interest rate expectations. Okay. And then Thursday, we have the GDP numbers coming from the UK. All right, guys. So it's expected to be negative for the month of March. So the quarterly GDP, we still don't have an estimate, but that's the yearly number, of course. But the quarterly number is expected to go higher. So, and the monthly is expected to be lower. So it's a mixed reading, but let me tell you how we get into a recession, or any economy gets into a recession. Hello, Soham. Hello. This jump good for US 100. What do you mean, Soham? Okay, so I'll wait for your answer, for your question. And let me go back to the explanation of a recession. Now, how do we know, or what is the definition of a recession? It's 2 quarterly readings of negative GDP. So if this number comes in negative, the quarterly reading, if it comes in negative for 2 consecutive quarters, you are technically in a recession. Okay, so the weakness is starting to show in the UK. The forecast is minus 0.2%. If it comes in at or below 0.2%, it's going to be a negative sign for the UK economy, the British economy. And the problem is their inflation is very high. So if they decide to cut rates to boost the economy, they're going to face higher inflation, which is basically called stagflation. Okay. And then in the US, we have retail sales and core retail sales, both expected to be lower than the previous. And the initial jobless claims at historical lows, around 200,000. It's expected to be slightly worse than the previous, but nothing much. And I think that's it for the economic calendar. That's pretty much it. So not very like many data points, but we have a lot of important events, such as the meeting between the US and China presidents. We have the speech, the first ever speech for Kevin Warsh as Fed chair, and we have the CPI report and the GDP reports from the UK. So we have a lot of volatility causing events in this week. So yeah, that's pretty much it. If you don't have any questions, let's move to the charts. Um, okay, Mesa is able to apply pivot points in trading, and she's happy. I'm happy that you're happy. Good job. The CPI jumped to 3.7. No, of course not, because it would mean higher, like it means higher inflation. How do you fight inflation? With higher rates. Higher rates mean uh, higher cost of borrowing for companies, which squeezes profit margins. So yeah, companies usually don't like have much cash. They operate and expand and like do the whole thing through debt. So if this debt becomes too expensive, this is going to squeeze their profit margins, and you're going to see a drop in the stock market. And if they just decide that they're going to start raising rates, or that the rates are going to stay higher for longer, the markets will not wait for, or investors will not wait for companies to start getting squeezed profit margins. They will start taking profit now, while it's at all-time highs. So yeah, higher CPI is not good for what's it called, the stocks. All right. Right, yep, I answered everything. Okay, so time to go to the charts. Time to go to the charts. Okay, we stop sharing and then we go here. And we go here and we say share. All right, so as always, we start with the dollar index. So let's see what happened here. Okay, guys, so we had this first leg of rejection, and the price managed to go back to the 61.8% retracement or level, which is the golden ratio in Fibonacci. So, which is like 97.5. It got here, and then, one second. Okay, it got here and got rejected once. Now it swept this low, and we might be looking at another rejection. If you can clearly see that we had a gap up on dollar based on what Trump said during the weekend. So that's that. And then let me look at the monthly real quick. Okay, so the monthly is still positive somehow. Last month, or last month's close wasn't very bullish, but it wasn't very bearish as well. Um, okay. Yeah, we're still good. We're still good. The dollar is expected to go upwards still on higher time frames. Let me go to lower time frames, 4 hours. How does it look like? Okay, so yeah, we might be looking at another low here. We might just like hit here and sweep it one more time before starting to go up. So far, like on lower time frames, it's still in a downtrend. Okay, so before it breaks 99, it's still going downwards on the short term, of course. Okay, NDXY hourly, same, yeah. So on higher time frames, it still looks like still looks good for a reversal to the upside, but on lower time frames, we have no signs yet. Okay, and then now we move to euro, which is the exact opposite. Yeah, let me see the Fibonacci extension or retracement, sorry. It's exactly at 61.8 and it's getting rejected from this area, which makes a lot of sense. So like a sell around this area would be really good for Euro USD. If someone is looking to hold it for a very long time. We go to weekly. Yeah, looks pretty bullish actually. Go to 4 hours. Yeah, so we need to wait and see, like, because those levels are good levels for long-term swings, shorts, of course. So yeah, like in order for us to confirm this move, we need to break below 1.1650. So this is the swing level right now. This is the first low. This is the high. It's respecting this so far. If it does not break this and it goes down and breaks this, then we have a failure swing and we move down toward 1.14 as the first target. Yeah, so that's for euro. So let's move to GBP USD. Same. So the whole market is basically moving based on the USD. So it's the exact same levels, but like the opposite because it's against the USD. So USD is actually moving the markets. That's what I can see from this. Let's take a look at USD JPY because Soham, are you with us? Look, my friend. Yeah, it's very unlikely for USD JPY to go down unless they intervene one more time. But for now, it's still, yeah, it looks weak, but it got rejected from this area, which is very important. We might be looking at a reversal to the upside, especially if, as we said on the DXY, it reverses to the upside. If DXY reverses to the upside, then this is going to go back up, and we're going to see more interventions by the Japanese government. Which RSI do I use? The one and only RSI. There's no more than one RSI. It's RSI close 14. If you change any of these settings, then it's not RSI anymore. You can call it Mesa if you want, but it's not RSI. RSI is an indicator that is, or like a price oscillator that actually works based on certain settings. That's why like the guy who invented it, I think what was his name? Something Williams. Yeah. Anyway, so the guy who invented it made it like based on those settings, and he called it RSI. So if we change any of those settings, it becomes Soham, it becomes Mesa, it becomes safe. Got me? How much Japan Central Bank is able to intervene? Now, you have an idea on how they intervene from the first place? Now, usually, if they have a lot of reserves, yeah, you should be using the default setting on RSI. Yes, if you're going to use RSI. Anyway, pardon me. Now, how does the Japanese government intervene? Simply by selling some of the USD reserves they have. And with this money, they buy what? They buy JPY, the Japanese yen. That's how they somehow push the dollar down and they push the JPY up. That's how they strengthen their local currency. So to answer your question, how much can they intervene? As much as they have USD. If they have like deep pockets and if they have very large USD reserves, they can keep doing it for as long as they can actually afford. China, hello Arif. China ads, yeah, they never stopped buying. Actually, they stopped buying for a couple months, and then they went back to buy gold. Not only China, many central banks. All right, so let's see what we have here. So take a quick look at Bitcoin. See how it's doing. Yeah, I think Bitcoin is off the hook for now. Like, I think we're going to see 90,000 before we do anything else. Weekly here. Yeah, on the weekly, it's still stuck under the 126-day moving average, which might cause it to go down. But 1 second, let me check something. Yeah, it actually woke above this. So it's more likely to go up than down, Bitcoin. But as I said, I don't chase the market. If it goes back or if it drops to my desired entry, I would enter. Otherwise, it's not mine. I'm not going to chase it. Okay. So that's for weekly. Go to daily. Yeah, it's on the daily. It's stuck under the 200-day moving average. So yeah, that's another thing. Yeah, and Bitcoin is still in this upward moving channel. Okay. US 100. Yeah, sure. All time highs. All time highs. Okay, so very bullish here on daily, very bullish here as well. On the 8 hours, it's very, very bullish. Actually, look how bullish. Like any correction like to 28,900 or 800 could be a good buy opportunity, yeah? Because look how strong this trend is. And I want you to start looking at trends as tops and bottoms. So this is the first top. This is the second top. Tack. Pardon me. Yeah. So we have this top here, this bottom here, this top here. Now you can be buying somewhere around this area with your stops below here. But this is Nasdaq, and like it moves like with crazy volatility, so it can easily sweep this and then move up. So if you want to be looking at setups, so you should start looking at setups around 28,500, 28,600. You should be looking for buy setups around that area. I think I'm getting sick. Do you think we can see before CPI? Yeah, that's not very far off. Like it can jump 800 pips in a single session. Like we've all seen it happen. So we might see 30K, yeah. But 30K is going to be a very hard number to break because it's a psychological number. Like imagine like when the Dow Jones broke 30,000 for the very first time ever, it's Dow Jones and it's much bigger. Once it broke 30,000 for the very first time, we saw a strong rejection to the downside because, like, whoa, 30,000. Now it's at 50,000. But now the US 100 is facing the same psychological level, which is 30,000. Like, that's a very big number. Okay. The hourly. Yeah, like any correction to the downside would be a good opportunity to buy. So this area, which is 28,800 something, and you can place your stops below this area or below this area for safety. So your closest stop loss would be 400 pips away, and it's not very safe. So for me, like, I can tell where it's going, but it's not worth it. Like, if you're going to make like say 500 pips on Nasdaq, your risk is 400 pips, so it's not very worth it. Like, I'm not interested in working with Nasdaq at those points. But if you remember back like a couple of months ago, or like a month ago, not even a couple of months ago, remember when someone asked me on the live stream about Nasdaq, and I saw a trade and I took it. I think it was here. Was it here? Yeah, I think it was around this area. When was that? Yeah, April 13th. Yeah, this might be. Yeah, exactly. This is the area. We saw this. Let me go to 1 hour. I remember it was 830, yeah? Yeah, I entered at 830, which is this area. And what I wanted to do is, what I did was this. This was my target, which was 1,000 pips to the upside, as far as I remember. But look how much more it went up. But why did I take this trade, for example? I started telling you about this just to remind you of something. Because look, like, you enter somewhere around 830, your stop loss is very, very close by. That's the only reason I entered Nasdaq. But otherwise, and look at the risk reward. I exited 1,000 pips later. So yeah, it's a 1 to 10. Got me? Like, my stop loss was 100 pips and my TP was 1,000 pips. So yeah, this case, I would enter. But because of the setup, because of the pattern, which is the bullish pennant. But currently, we don't have such patterns. So I wouldn't like just enter at a support with my stop loss at the previous low, because the previous low is 500 pips away. I'm not interested. You have your TP at 856. What do you mean? What, like, you're buying, you're selling? What are you doing? I think you sold, right? And finally, we go to gold. Let's take a look. The monthly, how does the monthly look? Okay, so the monthly candle looks, yeah, somehow stable. And it still has 18 days to go. The weekly last week closed like somewhat bullish, but below this area and below this moving average, so we might start to see a drop. And on the daily, it's still below the trend line and the 50-day moving average. So as long as we're below 4,900, This scenario, which is like a drop to here, is um, is still valid. Okay, let's go to 4 hours. Okay, yeah. So it broke this low, which is Friday's low, 676, and it closed under. But let's see, because this is the short-term trend line. It might reject it to the upside, so we need to wait. I wouldn't like trade anything now, but if this candle, that current 4 hour candle, closes below this area, which is below 620, I think it's gone. خلاص. It's going to drop, and uh, it would be the last chance for gold to go up. If it doesn't go up from here after this engulfing candle, look, we have a very strong engulfing candle, bullish engulfing on the 1 hour. So this is gold's last chance to just like fly from here. If it doesn't, it's going to suffer and it's going to break below the 4,500 area that is highlighted here, which is here. So let's wait and see. But um, this is gold's last chance. Seriously. Okay. Yeah, so do you guys have 29? Ah, okay. So you're buying now. You're in buys? You are in buys. Um, well, so how did you decide, or how did you, yeah, how did you decide your TP? Why this exact number? It's going to be an all-time high, but why? What made you say 29,856? This number has never been seen on Nasdaq, so it's definitely not a level. So what is it? Remember when I bought gold around 4,900, like at the beginning of the year, and it went up like crazy in January. It went up to uh, 5,600, and I had my TP at 5,555, which is four fives. And I was very honest about it. I told you guys I liked the number. That's why I placed my TP there, but nothing technical about it. And I was lucky enough that it reached more than 55555, and I took profit on it. But I'd like to understand how you took. Any reason for EMA and SMA for short time frame and long time frame respectively? Osama bin what? Are you the guy? I didn't get your question, Osama. Can you please rephrase? I'd love to answer your question, but I didn't understand it. So please rephrase it. Okay. I have been watching it for some days, and what I saw is it reaches around 800 at least before a drop. So with a low risk, I took this buy at 29,105. Well, good luck. I'm sure you're taking it based on analysis, not just guessing. So I trust you'll do well on this. Okay, guys, I'm waiting for Osama's question. So Osama, please uh, rephrase your question so that we answer it because I think it's an important question, and then we call it a day. Unless you guys have more questions, which I'm happy to answer. Yeah, just 0.1% risk. Yeah, that's totally fine. No problem. So where's your stop loss? Is it at break even yet? Ah, okay. No, the EMA, I use EMAs for a band, for like to have two bands. Let me show you. Let me zoom in so that you can see. Okay, so I'm going to turn off everything except for the EMAs so you understand what they are. Okay, so basically the EMA are those two. Like I created bands using those two EMAs, the five high and five low. So when prices close outside or inside the bands, it gives me an idea. And as I said it, I'm not taking credit for this. I learned this from a friend who took a course with um, Charlie Burton, which is one of the trading veterans of our time. So he created this method, and when I tested it, I liked it. That's why I like I use it to decide whether I stay in trades or exit trades or so on. Okay, so that's pretty much it. Um, but the simple moving averages, I use those for what? I use them to actually execute on trades. I use them as supports and resistances. I use them as an extra layer of confirmation. And instead of me just drawing horizontal lines on the chart, uh, those moving averages actually follow the price and give me a more up-to-date support and resistance, because the support and resistance become more important and more significant when uh, when they're most recent, if that makes sense. Like, because people still remember that, oh yeah, 4900 on gold is a big resistance. They still remember it. But after 20 years, when price is at, I don't know, $10,000 an ounce, will those same investors remember that 4900 was a good resistance back then, 20 years ago? Not really. So the more recent or the fresher the level, the more important it becomes and the more significant it becomes in terms of price respecting it and getting rejected from it and so on. So that's why I like moving averages, because they give you the most up-to-date reading of support and resistance. After the president's statement in the morning, do you think he will say something else today which could, drive US 100 down? Possible. This guy is crazy, man. And like, he's unpredictable. If he says we're going to keep the Strait of Hormuz blocked and we might go back to the military operations, yeah, uh, that would drop the US 100. All right, guys. So I hope I answered all your questions. We went through everything. I hope this prepared you well for the week. Good luck trading this week. Beware of the volatility, high volatility that we're going to witness this week. Take care of yourselves, and I'll see you on the next one. Bye bye.